Imagine this. You are sitting there, scrolling through endless noise, and suddenly everything changes. The world you thought was stable starts cracking under pressure from forces you never saw coming. Right now, as I speak these words on January 17th, 2026, silver is not just another metal gathering dust in some vault. It is the epicenter of a global storm that is reshaping economies, igniting investor frenzy, and forcing nations to scramble for control. China has slammed the door shut on silver exports since January 1st, locking away 60 to 70% of the world's refined supply behind government licenses and strategic stockpiles. Physical prices in Shanghai are exploding, with premiums hitting $10 to $13 above the spot, pushing real metal costs toward $105 per ounce, while Western screens flash a deceptive 90. Industrial giants in solar, electric vehicles, artificial intelligence, and electronics are in panic mode, hoarding every ounce they can grab because without silver, production grinds to a halt. This is not hype. This is reality unfolding live, with supply deficits clocking in at 117 million ounces last year alone, the fifth straight year of shortages. Investors are flipping from short to long positions for the first time in history, signaling the end of the old game. If you think this surge to $90 is wild, wait until it smashes through 100, driven by inelastic demand and vanishing inventories. The paper market is cracking, physical reality is taking over, and those in the know are positioning now. This is your wake-up call to stay glued, because what happens next could redefine wealth for generations. Before we dive deeper into this explosive story, I want you to do something right now. Drop a comment below and tell me where you're watching from today. Are you in the United States, feeling the ripple effects from Wall Street, or perhaps in Europe, Asia, or somewhere else around the globe where this silver frenzy is hitting home? Your comments fuel this conversation, and I read every single one. Let us build this community together. All right, now that you have done that, let us start. I am thrilled to be here with you today, breaking down what is hands down the hottest financial story of early 2026. Silver has hit around $90 per ounce as of this morning, January 17th, with spot prices hovering between 89 and 91, depending on the exchange you check. But do not let that number fool you. The real action is in the physical market, where premiums are skyrocketing and the true cost of owning actual silver is pushing boundaries we have not seen before. I have spent hours researching the latest data from reliable sources like the Silver Institute, Trading Economics, Kitco, and real-time updates from exchanges such as COMEX and Shanghai. This is all based on facts, not speculation, and what I am about to share will make you understand why experts are predicting silver could smash through $100 fast, potentially reaching $135 to $309 in peak scenarios, according to analysts at Bank of America and others. First, let us talk about the trigger that set this all off: China's export ban on silver, which went into full effect on January 1st, 2026. China is not just a player in the silver market. They dominate it. They control roughly 60 to 70% of global refined silver production. That means the shiny metal used in everything from solar panels to electric vehicle batteries to high-tech electronics mostly flows through their refineries. Now, with new restrictions requiring special government licenses for exports and only a handful of firms qualifying, a massive chunk of the world's supply is essentially trapped inside China. Reports from Kitco and Bloomberg confirm that Chinese entities are paying premiums above global rates to secure their own stockpiles ahead of time. This is strategic hoarding at its finest, driven by their booming industries in clean energy and technology. Why is China doing this? It is a mix of industrial necessity and geopolitical strategy. Their solar sector alone is exploding, with photovoltaic cells demanding more silver than ever. Add in electric vehicles, artificial intelligence data centers, and advanced manufacturing, and you have inelastic demand that cannot be turned off. China is facing a silver deficit domestically, so they are prioritizing their own needs. Analysts from the Silver Institute reported a global supply deficit of 117 million ounces in 2025, marking the fifth consecutive year of shortfalls. With underinvestment in new mines taking 5 to 10 years to fix, there is no quick supply ramp-up coming. This ban is like pouring gasoline on a fire that was already burning hot. Now let us look at the price action. As of January 17th, the spot price on Western exchanges like COMEX is around $90, down slightly from a peak of 93.57 earlier this month. But in Asia, it is a different story entirely. In Shanghai, premiums have exploded to 10 to 15% above spot, meaning physical silver is trading at $100 to $105 per ounce. Posts on X from traders and analysts show queues forming outside bullion dealers in China, Japan, and Taiwan, with inventories vanishing overnight. One report from Pareto Investor highlights a decoupling. While COMEX showed $72 on January 1st, physical dealers in Asia were selling at $130 when they had any left. This gap is not closing because the metal cannot move freely anymore. Arbitrage, where you buy low in one market and sell high in another, is broken due to export controls. This frenzy is spreading globally. In India, which relies heavily on imported silver for its solar manufacturing, officials are scrambling as China cuts off supply. Elon Musk himself tweeted on X that this is not good, warning of impacts on batteries, electric vehicles, and electronics. Tesla and other tech giants are in the crosshairs because silver is irreplaceable in many applications. It conducts electricity better than any other metal, making it essential for efficient solar panels and high-performance circuits. With global electrification and artificial intelligence build-outs accelerating, demand is locked in and growing. Let us dive into the numbers to make this crystal clear. Global silver mine production is around 800 million ounces per year, but industrial demand alone consumes most of that, leaving little for investment or stockpiles. Banks, which were net short for years, have flipped to net long positions for the first time ever, according to data from the Commitment of Traders report. That means even the big players who used to suppress prices through paper contracts are now betting on the upside. The iShares Silver Trust ETF has seen record inflows, and physical inventories at London Bullion Market Association and Shanghai are at multi-decade lows. Forecasts for 2026 are bullish across the board. Citigroup sees silver reaching the high 70s, while Bank of America predicts averages around 58 but peaks up to 135 or even 309 if historical gold-to-silver ratios play out. Gold Silver's lead analyst Alan Hibbard expects silver to outperform its 147% gain from 2025, potentially adding over $100 per ounce to hit 175 or more. Trading Economics projects 81.80 by quarter's end, climbing to 88.63 in 12 months. But bolder voices like Peter Krauth and Frank Holmes see $100 as conservative, with volatility pushing higher. Why is this so viral-worthy? Because it is not just about prices. It is about a fundamental shift in how the world values real assets. The paper market, where futures contracts trade claims on metal that may not even exist, is losing control to the physical reality. Lease rates are spiking, borrowing costs are jumping, and spot prices are trading above futures in some cases, which is backwardation, a sign of extreme tightness. Dealers are reporting delays, limited supply, and cash settlements because they cannot deliver physical ounces on large orders. I am telling you, this is the kind of story that forces people to act. If you are an investor, you are looking at silver as a hedge against inflation, dollar weakness, and geopolitical tensions. The United States is even classifying silver as a strategic asset, with reports of hoarding to counter China's moves. Bloomberg talks about a commodities hoarding era, where just-in-time supply chains give way to just-in-case stockpiling. Oil, rare earths, and now silver nations are building buffers against disruptions. But let us keep it real. Silver is volatile. It earned the nickname the devil's metal for a reason. We saw a quick dip from 92 to 89 recently on profit-taking, but the momentum is upward. Technical patterns show long-term breakouts with support at 85 to 87 and resistance at 100. Once it clears that, the sky is the limit. Now imagine the implications. For everyday people like you and me, higher silver prices mean more expensive electronics, solar panels, and even medical devices, since silver has antibacterial properties. But for investors, it is opportunity. Stacking physical silver coins or bars, buying mining stocks, or ETFs, the choices are there. Just remember, do your own research and consult professionals. This is not financial advice, but education. As we push deeper, let us explore the history to see why this feels like déjà vu. Back in 1980, during the Hunt Brothers squeeze, silver hit $50 equivalent to over $150 today adjusted for inflation. That was driven by hoarding and speculation. Today, it is fundamentals, chronic deficits, export bans, and tech demand. China is not just hoarding, they are weaponizing silver as a strategic asset similar to their rare earth controls. Posts on X from influencers like Shanaka Anselm Pereira highlight the absurdity. Silver at 130 in Tokyo, 80 in Shanghai, 71 in New York on January 1st. Same metal, different prices because of barriers. This decoupling exposes the lie of a unified global market. Western screens show controlled paper prices, while the street in Asia reflects scarcity. Experts like Michael Widmer from Bank of America say silver could top out between 135 and 309 if it mirrors past ratios with gold, which is trading over 4,500. The gold-to-silver ratio is around 59 now, but historical lows suggest massive upside for silver. Let us talk strategy. If you are watching this, you are ahead of the curve. Mainstream media is just catching up, with Fortune reporting 89.56 on January 15th and MarketWatch showing futures around 89 to 90. But underground, on platforms like YouTube and X, the buzz is electric. Videos titled China Just Won, Why Silver Hit 90 and the Silver Squeeze, JP Morgan's Hoard Meets, China's export ban are racking up views. I am passionate about this because it levels the playing field. Silver is accessible. You do not need thousands to start. A single ounce costs less than $100 right now, but that window is closing. As premiums rise, expect dealers to hike prices for eagles, maples, or generic rounds. Geopolitics adds fuel. Tensions with Venezuela, Iran, and broader Middle East shifts tie into this. Some analysts link silver shortages to currency resets in Iraq and Syria, where asset-backed money needs hard assets like silver to stabilize. But stay grounded. Risks exist. A stronger dollar could cap gains, or if China eases bans unexpectedly. Yet, with defense budgets jumping 50% under new policies and reindustrialization demanding more metals, the trend favors bulls. As we near the end, reflect on this. They know it is over for the old low-price era. Institutions are positioning, nations are hoarding, and retail investors are waking up. Silver is not just exploding. It is redefining value in a world fleeing fiat uncertainty. If this resonated, hit that like button, subscribe for more, and share with someone who needs to hear it. Your engagement makes this possible. Remember, comment where you are watching from. I love seeing the global reach. In summary, silver at 90 amid China's hoarding frenzy is the start. 100 is coming fast, and beyond that, who knows? Stay informed, stay engaged, and let us ride this wave together. Thank you for your time today. This is the kind of knowledge that empowers, and I am grateful to share it with you.